You are watching Market Watch, the brief overview of the key events from the world of finance. Just yesterday, we talked about the fact that the published inflation data were too optimistically perceived by investors. Almost immediately after the publication of yesterday's issue, investors received an official confirmation of our words. 3 representatives of the U.S. Federal Reserve System, President of the Federal Reserve Bank of Cleveland Loretta Mester, President of the Federal Reserve Bank of New York John Williams and President of the Federal Reserve Bank of Richmond Thomas Barkin issued a warning that interest rates will remain high for longer than expected. These are not the first warnings that have been heard from representatives of the Fed that the key interest rate may remain at the current level for much longer. Most likely, we are talking about the fact that the American regulator may begin to reduce only at the end of this year or early 2025. Recall that at the moment, the main scenario takes into account 2 rate cuts, each by 0.25%. If investors receive confirmation of the stability of the U.S. economy, then the activity of sellers in the stock market may increase. In this case, the weakening of the U.S. dollar will slow down, and perhaps we will even see its growth paired with most currencies. If we develop a scenario in which the Federal Reserve does not begin to reduce the key interest rate until the 4th quarter of this year, then we should not expect further growth in gold prices. Indeed, in this case, the yield of government bonds will remain elevated, thereby constituting a high level of competition for gold. But until the quotes return below $2,340, a bullish scenario should not be completely excluded. After all, the general mood remains bullish as investors continue to believe in the strength of the U.S. economy. Traditionally, we conclude our review with the cryptocurrency market, which is becoming more and more similar to the stock market. Please note that the key stock indexes rose significantly on Wednesday, and on Thursday there was a moderate weakening. The situation is similar with the dynamics of the movement of quotations of the largest cryptocurrency. Bitcoin could not stay above 66,000, nevertheless, the bullish scenario is still not cancelled. But at the same time, there are no obvious prerequisites for further growth either from the point of view of fundamental analysis or from the point of view of technical analysis. For the next wave of growth, a really strong driver is needed. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.